Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Salesforce, the executive exodus. Slack CEO, the latest to leave, hot on the heels of co-CEO Bret Taylor's departure. That announcement was last week. More on the pressure building for founder Mark Benioff.
And Microsoft is willing to fight for its $69 billion takeover of Activision Blizzard. We'll discuss what could be the first major test for FTC Commissioner Lina Khan.
And talking of the FTC investigating crypto funds over misleading advertisements. This, as Standard Chartered says, next year could be another brutal one for Bitcoin. Could go as low as $5,000. But first, Ed, you know I love the macro. Let's dig in, because today it was a pressure story on stocks. Once again, S&P off by 1.8%, similar moves for the NASDAQ 100. But this is a story of macro. This is a story of the Federal Reserve. This is a story of your good news being bad news. Once again, we actually had that services data come in the US, and it was roaring strong. What then in terms of the rate hikes that are still yet to come to really try and curtail some of that exuberance, that excess demand in the system we see in the United States? The dollar, therefore, finishes its rout. It's back up 0.8%. Moving on, because actually China got a bid in. We saw 9% move for this particular Hong Kong tech-focused index. Now, this is on a 5-day winning streak. The reason we are seeing yet more bullishness come into Chinese stocks, we're having more hopes that there will be a curtailment in those COVID lockdowns, Ed.
Yeah, it was interesting because that carried over to the US session as well, Caro. Just 5 names in the green on the NASDAQ 100, 3 of them the US-listed shares of China tech. You're hearing about cities like Shanghai, Hangzhou, Zhengzhou all easing the testing requirements, so the ADR is getting a boost. Activision Blizzard up 0.8% following that Bloomberg report Friday night that Microsoft's willing to fight, particularly in the regulatory context, to get this deal done. Tesla down more than 6% after a Bloomberg report that it would cut production in China at its Shanghai plant. We'll dig into that later in the show. Salesforce down 7%. Really interesting here because there's just a wave of executive departures. I know we're going to get into this, but this is a stock now at its lowest level since March 2020. Yeah. It's not just about executive departure. I think we've got to have a conversation around growth as well, because this is a company that for a very long time has had decent double-digit growth. That's changed, and so has the roundabout or change in leadership at the top of that company, Caro.
And that's why, from Bloomberg Intelligence, Ed, that great note coming from our colleague Anurag Rana, really talking about the pressure building on Mark Benioff because of that lack of organic growth, and whether this sort of restructuring that befalls him can in some way be a hit or a miss. We're seeing, of course, where you're talking about the hit to Salesforce. Once again, announcement, co-CEO Bret Taylor only last week, and now a couple more that were announced before him. Now we, of course, get the latest. Slack CEO Stuart Butterfield and Mark Carter, Executive Vice President of Security, all exiting stage left. Bloomberg's Brody Ford is here to break it all down. That is quite the exodus. That is quite the revolving door here, Brody. And why? Are we getting any sort of feeling of what's making them leave?
So on the Slack side today, one thing that a lot of folks are expecting is that Salesforce spent a lot of money on these acquisitions, right? $26 billion for Slack, and now it's working to integrate it further into its product portfolio. So it didn't say that we're getting rid of Stuart because of this, but we saw the same thing happen at Tableau, another mega acquisition. Much of their leadership has left in recent months, and I mean, 3 top executives leaving on the same day. This is restructuring.
Brody, there's a lot of focus right now on software and cloud. Earlier today, we spoke to one of the CIOs at BlackRock. Just take a listen at how he sees this sector.
You're seeing growth slow, but you're still seeing positive growth, particularly in software. And so I still think it's a very good sector. Obviously, there are pockets in the sector where valuations got out of whack, and those have come down. And so I'm still optimistic on technology.
What Tony DeSpirito just described there pretty much describes Salesforce, doesn't it? This is a company that has slowed down on the top line, and Benioff has to prove now that he's going to change that somehow.
There's an interesting debate right now between investors. Some people still want to see Salesforce be a growth company. They want to see them go make some big acquisitions, keep that top line healthy. A lot of folks are saying you need to focus on the margins. You spent, $50 billion on acquisitions in the last couple of years. You really need to boost those profits. So, I mean, they are in a tough spot, even when you don't consider the fact they're losing some of the most famous talent. I mean, a tweet went viral the other day on Twitter saying, if you have Bret Taylor in your company, throw yourself in a volcano to keep him. They couldn't keep him.
Interesting. And I think, therefore, that is why we hear from Anurag Rana of Bloomberg Intelligence saying there is more pressure to prove that there is a bench there, a bench of future leaders who can drive forth sort of organic growth. It can't all be about one man. It can't all be about Benioff. What of the people that therefore step up? What of the person who replaces Stuart Butterfield, for example?
Yeah, so the person replacing Stuart Butterfield is Lydia Jones. She's a leader from the kind of core Salesforce products. And that, again, shows you that they're trying to further integrate it into the wider Salesforce, the more traditional way of doing things. But truly, I mean, when Brett left, a lot of people said Stuart Butterfield is the one who will replace him. People were saying, OK, great. And 5 days later, Stuart leaves, right? I mean, it's not a situation that's good, yeah.
All right, Bloomberg's Brody Ford across the Salesforce beat for us. We'll keep tracking that one. Let's move on, though, to China and to Tesla after the EV maker plans to lower production at its Shanghai factory. That, according to sources, this could be the latest sign that demand in China isn't perhaps meeting expectations. Tesla shares closing down 6.4% in New York, the biggest drop in around 2 weeks. Morningstar equity strategist Seth Goldstein here with us for more insight on this. It's interesting, Seth, because in the month of November, Tesla had a record month for domestic deliveries, more than 100,000 units. We're getting some sense, if these reports are accurate, that they're looking at the near-term demand and pulling back. What's your read on this?
Well, my read is that, they started off the quarter very well. If you look at the first 2 months of the quarter, they were selling at production based on the new expanded capacity at the Shanghai plant. Then you're seeing at the same time, the new energy vehicle market in China is seeing slowing sales growth. And due to potential macro headwinds, we could see a downturn next year, especially as subsidies fall off. So I think this is Tesla taking a look and saying we need to adjust production so we're not caught with a lot of excess inventory ending the year.
I want to point out that we asked Tesla to comment on this Bloomberg report. They did not respond or comment on the report. Local media reports in China or coming out of China said that it was false. Even so, China is an interesting market, Seth, because there are many more domestic players offering many more models than perhaps here in the United States or in Europe. What kind of a lever can Tesla use for pricing when it comes to demand and getting some more demand built up in that market?
So we've seen Tesla and other Chinese automakers cut prices in recent months as a way to try to spur demand. And I think that can happen. But, when you look at Tesla in China, they don't have the inherent competitive advantages that they do in the US or Europe. They don't have their own charging network built out. They're not using their proprietary battery technology, so they don't have the technological advances to the extent that they do elsewhere. And so, while they still are thought of as a reputable and high quality name, they just don't have as big of a lead in China as they do elsewhere. And that's why we see lower long-term sales growth in the Chinese market for Tesla.
Seth, it's so interesting because when I first saw the headline, I thought, oh boy, here's another company being hit by supply chain issues, being hit by the supply side, not the demand side. And therefore, to that end, has Tesla been able to ramp in Shanghai as it wanted to? Are we likely to see it remain committed to the space?
I think we'll see them remain committed to Shanghai. It's a low cost of production for them, and they use that factory to export elsewhere, to Europe, to the rest of the markets, especially in Asia, the Middle East, and Africa. So I think they'll still be producing, that will be one of their key factories, even as they ramp up Berlin and Austin to their long-term growth plan.
Talk to us about whether Shanghai can be more useful to them as an exporting hub more generally, or how much is this really to serve the local community? How much do they ship across to Europe, to the US? Are they making sort of from a perspective of profitability? Is it a good choice to be able to ship from Shanghai or no?
I think it's a good choice because it's a lower cost of production. China is still the largest auto market, so it's important to be there, be producing there, and be able to manufacture in China to sell to the Chinese consumers. But Tesla also is trying to grow their presence throughout the rest of Asia. They're trying to grow in the Middle East and in Africa, and that Shanghai factory allows them to do so and focus more on those markets, even as they ramp up Berlin to serve the European market.
Hey, Seth, I wanted to get your take on slightly something different, which was the semi-truck event, which they held recently. And the reason it came to mind is I was looking in the investor deck from last quarter and the table of the different products produced in different parts of the world. Shanghai is Model Y, Model 3. semi-truck just in Reno, Nevada right now. And it got me thinking about how they manage all of this, prioritize resources, for example, with semi-truck, particularly resources as it relates to batteries. Do you think that they can pull that off?
I think they can, because they produce different batteries based on the different factories as well. So when you look at, for example, the batteries in China are different than the new 4680s that they're going to be producing for the semi-truck, for Model Ys in the US, and for the Cybertruck. And so, I think Tesla's been very good at raw materials and inventory management, and I would expect this to continue even as they start to make multiple different types of batteries throughout their entire company.
I think overall, largely, Seth, just talk to us about your perspective on China right now and the global supply chain, and whether or not we are seeing companies decide that it's less valuable, less desirable to be there.
Well, I do think when we're looking at the electric vehicle supply chain, it is going to be important for U.S. companies to start decoupling a little bit from China, because the Inflation Reduction Act requires companies, especially for batteries and their raw material sourcing, to get them from the U.S. or free trade agreement partners. So for a company like Tesla, I think it's important to almost have two separate supply chains, one focusing on the U.S. operations, one focusing on China, that will allow them to, maximize the incentives available to consumers and take advantage of those U.S. Inflation Reduction Act subsidies.
Okay, we'll leave it there. Morningstar equity strategist Seth Goldstein, thank you very much. Now, coming up, we'll bring you the latest on the Microsoft-Activision deal and what other antitrust cases might be out there to watch. And as we head to break, Carol, I want to take a look at Vodafone Group following CEO Nick Reed's announcement that he'll step down at the end of this year. He tried to make some deals, right? And the stock price has been sliding. He's not been able to halt it. Really interesting. This is a name that's familiar to you, familiar to me. In the interim, Chief Financial Officer Margarita Delaval will do the job on an interim basis while they look for a new CEO. Vodafone.
Look at it, 25-year lows basically on a stock price. No commitment for who's going to be taking over. And the fact that they're paying him out on a 12-month contract as well. This is a significant move for this particular company, as they've been trying to make deals, what was it, in Italy and Spain, trying to be able to maneuver, become leaner, become more of a focused business. And yet, we see the implications on a 44% erosion of share price over the course of a year. He did make a sizable deal, didn't he, only recently? The fact that he spun out that Frankfurt-listed business to Vantage Towers. He raised, what, $16 billion? 16 billion euros is how much the deal was valued at. Still, he has to bid farewell.
Yeah, and he did one thing investors never like to see, which is cut the dividend after saying a dividend was an affordable thing to do. And yeah, look at the reaction.
We keep a close eye on all these companies. We're global. Not that we're totally British, but we like to bring in a little bit of a Vodafone flavor. From New York, from San Francisco, this is Bloomberg. Talk about M&A, because Activision Blizzard actually rose at one point in trading, up 1.5%, settled at about 0.7% higher after Bloomberg reported that Microsoft is ready to fight for its $69 billion acquisition of that video gaming company. That's if, of course, the US Federal Trade Commission does file a lawsuit seeking to block the deal. Hasn't yet. Let's bring in Sarah Olam, Senior Fellow at the Technology Policy Institute in DC, for more on this. And Sarah, we sort of wait with bated breath as to whether the US is going to be doing it. We understand the EU also focusing in the UK as well. From your perspective, how much is regulation and a pushback on this deal a likelihood across the US too?
Well, one interesting news point is today, Microsoft's president had an op-ed in the Wall Street Journal just at 1 o'clock. Claiming the pro-competitive reasons for the merger. So I think you'll see that this will be a big battle in DC. There was talk that it would be a likely lawsuit, but of course, you need a vote from the commissioners at the FTC before it can go out. So I think, and with international attention to the UK and EU, I think it's probable that it would go forward. It reminds me a lot of the AT&T Time Warner merger lawsuit a few years ago.
So I think this is interesting because we have to think about who might object to this. And I guess one name is Sony, right? I'm looking at the market share data. Microsoft had the second highest market share in the US 2021 for games consoles, 34.8%. Sony slightly more than that at 40%. What is the issue here? Why would Sony be upset about the idea of Microsoft buying Activision?
Right. Well, Sony is at the #1 market position at 40%. Microsoft's at second highest at 34%, and then you have Nintendo at 24%. So I guess they're concerned that Microsoft would have a competitive edge in cloud. That's an argument that you're seeing floated around.
I'm interested. Let's talk about what is in the interest of the user here. And we actually went out to our followers, to our audience who are there on Twitter. We wanted to give them a poll. We wanted to see whether they ultimately, Sarah, cared about whether Activision is owned by Microsoft or not. And it seems as though they want to see the deal go through. A cool 82% think Microsoft should be allowed to buy Activision. From your perspective, from a consumer user point, does it matter? Will they make enough concessions, do you think, to ensure that at no point me, the gamer, suffers from this?
Well, I think the consumer might be worried that their access to Call of Duty would be foreclosed on Sony's PlayStation. But even Microsoft has said that they are not in a position to want to even stop Call of Duty access on the PlayStation. And so arguments of foreclosure like that Microsoft would hold back certain games, seem to be weak. And I think the game players know that. If there's demand for Call of Duty, Microsoft and Activision would want to meet that demand.
We want to dig in here because, of course, this isn't happening in isolation. We heard earlier in the year, NVIDIA, ARM, that particular deal kiboshed. We know that this week, December the 8th, Meta is going to be going in front of the FTC, trying to be arguing its case for why it should be allowed to purchase within the VR company that produces a really hot fitness app. I'm interested whether you think ultimately we will continue to see fiercer pushback on these sorts of M&A deals.
Well, you also have the context that right now Chair Lina Khan is coming at these mergers with kind of a more activist position. Even in the Meta Within action, the FTC dropped some claims in October, and it brought the lawsuit against their internal staff recommendations. And so you see a lot of maybe more aggressive enforcement actions, but we still have to see what happens in court.
Sarah, we reported Friday, Microsoft's ready for the fight, according to sources. What does that fight look like? How many key stages are left to go before this deal closes?
Right. Well, you're going to need to see the FTC vote on the action, and then you'll see the complaint in court. And then, at least from a reference point, so I said earlier, this reminds me a lot of the AT&T Time Warner merger fight a few years ago. Well, in the end, there's so much fear mongering about foreclosure that TV channels wouldn't be offered to other networks. But 4 years later, AT&T wanted to sell off their Time Warner assets. So there's no guarantee that a merger would create anti-competitive effects. And so we'll just have to see what happens in trial and in the public eye.
Sarah, I know you're not a merger arbitrage specialist per se, but what's your assessment on the likelihood of this deal going through?
Oh, well, it's hard to say with the politics. And, I think a lot of it is depending on what the FTC is saying and what claims it brings. I think maybe they're gearing up for a long trial in court. And at the end, if you see what happened with AT&T and Time Warner, there might be congressional hearings. There might be a lot of back and forth. But eventually, it might go through. I mean, you don't know about the UK and the EU as well, and the 5 other countries that are looking into this merger. So to be determined.
Okay, Sarah Olam, Senior Fellow at the Technology Policy Institute in DC. Thank you very much. I find this fascinating, Caroline, about the FTC, their decisions to act, where to act. The next thing on our agenda this week is Meta as an example, and my question is, well, what's better, do it in-house or buy someone? You know, that's the question that everyone's facing now.
Organic, inorganic, and ultimately what that means for competition, particularly in such a really nascent space such as the metaverse. I think this is perhaps where the concerns come around. We saw, of course, on Friday too, Meta arguing that really they think that we shouldn't be having regulation in the space of the metaverse quite yet because you might choke off innovation. Well, in large part, that was the argument leveled at crypto as well. And I think now we're starting to see the arguments come forth. Should Meta be allowed to buy a within? Are they going to be stifling off competition by purchasing that particular fitness app company? They argue, of course, not. Also, to me, Ed, the FTC's been super busy, hasn't it? Today, just also acknowledging that it's going to be looking into the advertising around crypto. They're a busy set of people.
Yeah, it's a case of picking battles, but they've certainly got a lot crossing their desks right now. Anyway, coming up, we'll bring you the latest news in the world of global venture capital. This is Bloomberg. Time now for Talking Tech, and today we're taking a look at the world of startups and global venture capital announcements. We start with new research co-authored by Federal Reserve Governor Lisa Cook, showing that black founders of US startups are raising just 1/3 as much venture capital in the first 5 years of their life as other businesses in the same industry, the same state, and those formed at the same time. A part of the gap is down to factors like black firms having smaller founding teams, or those founders coming from different schools than other VC leaders, according to the report. And more news coming from FTX. Former FTX US president Brett Harrison is raising money for a crypto software startup. That's according to sources who say the fundraising target could be as high as $10 million for a $100 million valuation. The idea to create software that crypto traders could use to write algorithms for their strategies and to access different types of crypto markets, both centralized and decentralized. Finally, the Brooklyn-based coffee chain Blank Street Coffee is in talks to raise a new funding round, also according to sources, and it could be valued at around $200 million. Blank Street is aiming to top its last round valuation, though there's no guarantee that will happen, according to one of the sources. Caroline.
200 million for a coffee chain, Ed?
Yeah.
Why?
An expensive cup of coffee.
You've been to it in Brooklyn? What are we?
I've not, but I want to now.
Yeah. What's the inflation rate on that, I wonder? Meanwhile, coming up, we are going to be talking about close to home too, New York, Airbnb, other short-term rental platforms being challenged by major cities. The restrictions we discuss. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York alongside Ed Ludlow in San Francisco. And we've got to talk about New York City's strict rules of Airbnb, Ed. The hosts are about to get an even more stringent pill to swallow because today officials met with property owners to discuss proposed changes at the moment to short-term rental laws in the city. One of the most restrictive in the entire country is right here in New York. Bloomberg's Michael Tobin is also here. He's actually over in Brooklyn. And just talk to us, Michael, about what is fueling this debate at the moment? How much stricter? It's already pretty tough to rent out your apartment, right, on Airbnb. How much tougher could it get?
Well, now you have to have an official license. So under the current proposed regulation, you would have to apply for a license. It would cost about $145. And you'd have to submit a detailed diagram of your apartment, all of the fire escapes, all of the exits, and all of the doors and things like that. And you would also have to include all of the names of the people who live in the household with you and their relationship to you. And on top of that, you would need to send in verifying details like a utility bill, a government ID, something else with your name and address on it to actually prove that you live there. And Airbnb won't be able to process transactions for any of these properties that are not on the approved list.
Okay, that's quite a set of rules. Talk to us about the discussion points, therefore, when they're putting it to hosts and indeed to potentially people who want to be using the app when they come to visit. What do they think about it?
This has been going on for a year or two, and it actually started under the de Blasio administration, and now it's finally going into effect under the Adams administration, and it's going to be put into place next year. So we're in this kind of comment period where today there was this, like you said, this meeting where hosts were talking with the Office of Special Enforcement, who enforces the short-term rental rules. And it was a very spirited discussion between tenants who were upset that Airbnbs had essentially kind of taken over their neighborhood in areas in Midtown Manhattan, like in Hell's Kitchen, and then people who live in Brooklyn and Queens who say, we have a single family home and we just want to rent out one room in our property and just earn a little income off that. And there was lots of comments and lots of debate that was going on. And it just kind of shows the strain that's in communities when you have, a startup economy and a tight housing market.
New York City is one market for Airbnb, right? It's an important market, one of the biggest here domestically in the US. Is this issue being replicated in other cities around America? What kind of challenges does Airbnb face outside of the New York City area?
There is regulation pretty much everywhere you go. That's kind of the long and short of it. And in Big Bear, California, which was a really, really popular short-term rental market destination, there were proposals that were put on the ballot there, and voters actually voted them down. In Santa Monica, California, there's legislation, which is actually what the New York legislation was modeled off of. In Boston, there's legislation. So yeah, it's in big towns, small towns, it's in resorts, it's in cities, it's everywhere. And it's also not just a US issue, right? I mean, it's what you're seeing in Barcelona, it's what you see in Paris. There's all sorts of regulations all over the place to regulate short-term rentals and pretty much to address the same problem, which is housing supply and making sure that people can find adequate housing.
Yeah, I don't know if you guys agree with this. My mind goes straight to the hosts, right? You have to remember what Airbnb is. It's a platform where you can share access to your home. And, for many across America, they're feeling the pinch of inflation. What are you hearing from the hosts themselves? That they must be arguing, well, hold on, I want to be able to rent out this property. It's a means of getting income.
Well, that's exactly it. I mean, if you think about how expensive it is just because of inflation that we're living through and the cost of everything going up, a lot of these hosts are saying that this is the only way that I can either afford a mortgage payment, I can afford bills. Some of the people that spoke today were retirees, and they said that their pension and that their Social Security didn't have enough, bandwidth to make it all the way, and they were using this as a way to supplement their income. And Airbnb, really recognizes that this is a way that people can essentially make extra money. And they've kind of leaned into this going into the next year, where they made it easier to get hosts online because they think that if the economy continues to soften, people need alternative sources of income. They're probably going to list their host or their home on Airbnb. I am not sure what to make of that, because you also have to think about, do people want to travel if the economy gets soft, right? And how much discretionary spending are people going to have? Are they going to go and travel if, their money isn't going to go as far and things get tough?
Bloomberg's Michael Tobin reporting there on Airbnb. Thank you. Now, Elon Musk says Apple has fully resumed advertising on Twitter. The billionaire revealed the news during a Twitter Spaces conversation over the weekend. He added that Apple is the largest advertiser on the social media network. Last week, Musk blasted Apple, saying that the tech giant had mostly stopped its ads on Twitter and threatened to pull the site from its app store.
Meanwhile, we've got so much more to cover, plenty of stories. And indeed, the FTC is one we're going to look at again, because not only is it analysing whether Activision should be bought by Microsoft, it's also probing crypto firms over their advertisements. More on that. We've got, of course, Meltem Demirors. She's going to be sharing some of her 2023 crypto expectations too. This is Bloomberg.
More bad news for the crypto space. The FTC is investigating crypto firms over misleading advertising. A judge will decide if lender Celsius owns its users' crypto. And Circle, which issues the world's second largest stablecoin, said its planned SPAC listing with Concord has been scrapped. So lots to keep up with. Bloomberg's Hannah Miller covers all things crypto for us. Let's start with that FTC investigation. Simply, what do we know at this stage?
We know that they're investigating multiple firms at this point. It's unclear who specifically they're looking at. But there have already been a lot of issues with advertising in crypto. We know with FTX, for example, that investors are suing them over false advertising. FTX had multiple high-profile ads and also sponsorships with like Tom Brady and Steph Curry. So it's pretty big names involved in this.
I want to talk a little bit about Circle as well. It's interesting because this has been in the works for quite a long time. Market conditions have changed. What did Circle say about why this happened? I read in the story that neither side actively terminated the deal.
Yeah, no. So it's basically they've kind of said to us that it's been mutual. Neither side made the move to terminate the deal. And that there's no bad blood between them, that there's still a huge goal for Circle to go public eventually. So we know that this was a $9 billion deal. Crypto prices have declined significantly since they amended the deal terms in February. And so it's a really interesting thing to see in the wake of FTX that they've made this announcement. And there's just been also a rout of the SPAC market in general.
Let's go also to that third story that Ed mentions. And it's all to do with a federal judge deciding basically who owns, well, tokens that you then lent out, right, or were gaining interest on. This is Celsius. Depositors put money into Celsius, right, Hannah, expecting that, well, the money was still theirs and they're just earning an interest on it. But now it seems as though potentially in this bankruptcy hearing, they could potentially not be theirs.
Yes, that's true. So Celsius is asking to sell crypto on its balance sheet for $18 million, about $18 million worth of crypto. The judge is trying to decide whether they actually own that crypto or whether it belongs to users and whether users forfeited that crypto in exchange for gaining interest. So the judge is saying that he'll decide on it, as early as next week. But this is still up in the air, and this shows how crypto regulations are really evolving, and that this is a new frontier for many legal experts.
A new frontier, which has suddenly got a barrage of bankruptcies on its hands, Hannah. And I'm interested as to whether, does this matter for the other players? Will we see such sort of viewpoints and such holdings that they currently have being argued in this way?
Yes, this is a monumental thing for crypto lenders. So this could set new precedent going forward. And we do have a lot of lenders still playing in the space. We also have a lot of lenders who have been touched by FTX contagion. So I'm thinking, BlockFi here at Genesis. So it'll be interesting to see what happens next and what this judge rules.
I feel like it's always interesting to see what happens next in the world of crypto. Hannah Miller, we thank you for being so on top of all those various stories today. And we want to sort of dig into the analysis of all of those with us and actually bring in another little flavor of today, because I don't know if you saw it, but one of the main headlines that caught my attention was a bit of a brutal one when it comes to how much further we could see crypto fall, in particular Bitcoin, the OG. Standard Chartered, the bank's global head of research, Eric Robertson, has been looking at some worst-case scenarios. He looked at a number of potential downfalls for Bitcoin. He said it could drop, get this, another 70% to just $5,000. That would be one of the more extreme outcomes, to be fair. But he's also talking about maybe demand swinging from digital gold to the old-fashioned type, actual gold, depending on what the Fed rate hike cycle looks like. We want to discuss all of this. Meltem Demirors, head of strategy over at CoinShares, which has a cool $1.5 billion in assets under management. And Meltem, it's always great to have your voice on our programming. Just talk to us first and foremost about your outlook for some of the more resilient thus far crypto. Like, yes, Bitcoin sold off hard, but in this tumult of the last month or so, many would talk about the resilience, the price level it's found. Could we see it sink further to a 5,000 handle?
I think the big thing to look for here is forced selling. So obviously this summer, after the fallout of Three Arrows Capital, which happened to use a lot of Bitcoin as collateral, we did see a sell-off. Since then, Bitcoin has sort of stabilized between the 15 to 20K range, and our outlook is that it will remain there. We don't see a lot of forced selling remaining in the market. You'll notice that even with the FTX collapse, one of the things we didn't see was a huge sell-off in Bitcoin, and this is because the collateral that was utilized by FTX to guarantee and secure loans was primarily in FTT and other cryptocurrencies. So the key thing to look for is who are the big sellers of Bitcoin. And at this point in the cycle, as you said, there's never a dull day in crypto. There just aren't a lot of forced sellers of Bitcoin left.
What about just trading activity in general? There was that headline, Binance seeing a 30% increase in its trading activity amid the FTX implosion. Unsurprising, I suppose, given the tremors we saw in the market, the flurry of volatility and activity, but also the fact that one of the major exchanges just sort of moved stage left. What is activity looking like from a trading perspective?
I think when we look at the trading side, we have to separate retail trading activity, which is reported on in Coinbase's public earnings. That is a great resource for gathering public information that's audited, which is why publicly listed companies, I think, are so important to this space and why we're excited about Circle finding a route to public markets. But if we look at the institutional trading side, one important thing to note is we haven't seen massive outflows or inflows into Bitcoin and other digital currencies. If we look at the derivative side of the market, we haven't seen a material change since the summer. Open interest remains at fairly stable levels. So I think, again, the key question is, who are the participants in this market? How is their activity changing? The key question will be, as we head into 2023, what the broader macro market looks like and whether or not firms will be repositioning their allocation to Bitcoin and other cryptocurrencies, depending on overall macro risk. I think generally we've seen investors taking a risk-off approach in tech equities in particular, and also crypto assets. But it'll be interesting to see as we head into the new year, depending on the rate environment and sentiment about risk assets, if some dollars will flow back into Bitcoin. I certainly don't think that Bitcoin and gold are substitutes. I don't see investors who would want exposure to Bitcoin, which is more volatile, more of a growth asset, potentially allocating to gold instead.
Well, Milton, what about Bitcoin relative to other cryptocurrencies? There was another really interesting story on Bloomberg today that in times of duress, historically, Bitcoin's dominance within the broader market of cryptocurrencies goes up. And the headline of the story is that Bitcoin's status quo is making a lot of people nervous because it's kind of holding at around 40%. Given the sort of chaos of recent weeks, the drop in value of a broad range of digital assets, why is there not more love for Bitcoin given its kind of more mainstream status?
One of the big challenges with Bitcoin right now that we're watching closely is the mining side of the ecosystem. So Bitcoin supply is mined every day. 19 million of the 21 million Bitcoin that will ever exist are in circulation. But every day there's Bitcoin being produced, and miners have typically held some portion of those Bitcoins. In the current price environment, what we're seeing is miners are selling a lot of that supply. So there are some fundamental dynamics there around incoming supply of newly mined Bitcoin coming into the market and new buyers of that Bitcoin. And so I think one of the things we'll be watching for is the economics of Bitcoin mining and how it impacts the propensity of Bitcoin mining firms to either hold or sell that Bitcoin to cover OPEX expenses. But again, the big thing to look out for is where are the inflows and where are the outflows. Again, if we look at the last 2 quarters, ever since the summer when we saw that major drop in Bitcoin following forced liquidations, forced selling from the 3 Arrows fallout, which was much more Bitcoin and Ethereum centric, we haven't really seen major moves in Bitcoin. We've seen Bitcoin be somewhat range bound and trade range bound. So we need to see a major catalyst to the upside or potentially to the downside. But as we saw with the FTX incident, there really isn't a major pool of Bitcoin that we see coming to market that could push the downside. It's really a question of, will there be new inflows in the new year that could potentially kick off the upside?
Milton, Caroline and I have been very excited to get you on the show because we finally get the opportunity to ask your take on FTX. What happened? How did we not see this coming?
I think, again, as we look at what's happened in the crypto space broadly, at CoinShares, we are a publicly listed company. That is a painful exercise for a crypto company. But I think it's extremely important that as the space grows and matures, we have that transparency, that oversight, that governance, the reporting that comes from being publicly listed. While it's not a panacea to financial fraud or potential misconduct or poor governance, it certainly adds a lot of hurdles that firms have to go through. It adds a level of oversight and transparency that's needed. I think what we saw happen with FTX, again, is the result of a lack of transparency, a lack of oversight. It was an exchange that was domiciled offshore. It's not domiciled in the United States of America. And so I think, again, as we move forward, we're keen to see more firms that are operating either in a more public manner and providing more transparency, or the other step is doing more activity fully on chain. These ledgers are public. This is why this technology is so exciting. So we'd love to see more firms embracing the public nature of the ledger and choosing to do things in a more public, more verifiable manner.
Yeah.
Again, our credo is don't trust, verify. So let's use the technology to do that.
Let's go back to the first point there, Meltem, of more companies going public. Today, a bit of a setback in that respect. The fact that Circle isn't going to be following through with its special purpose acquisition company, not going to be hand-holding in that way to a public market. Instead, they're going to push through the date that they were meant to be making a decision of December the 10th. They still say they want to go public. Do you think that will happen ultimately while we still got these fallouts ready to happen and there's still uncertainty around the regulatory environment?
I think it will be challenging. I think there are a number of challenges facing firms right now who want to go public. Some of those are not unique to crypto. I think it's just generally a challenging time for tech equities in particular and growth stocks. We've seen a massive hit on valuations. Investor sentiment has shifted, and we're just not seeing the multiples that we saw a year ago, 2 years ago. I mean, I remember stocks trading at 1,200 forward EPS multiples. Different time now. I think the other challenge is the SEC on the Circle SPAC, the clock ran out, right? So there is a time window within which these things have to get done. And in some instances here, the regulator is just not picking up those documents and getting back to firms or letting these processes move forward as intended. And so again, until there's a change in Washington, D.C., whether that is a change in administrative leadership or whether that is a change in policy itself, I think it'll be challenging to see more firms going public. But we do see other routes to market, whether that's via Canada, whether that's via a European jurisdiction. But I think, again, America is the largest capital market in the world, and it's very important for more firms to have that transparency, for analysts to start covering crypto equities, and for the market to really start understanding some of the fundamental differences in business models between different crypto firms, because not every crypto firm operates the same way or makes money the same way.
Yeah, we're certainly learning that lesson. CoinShares Head of Strategy, Meltem Demirors, thank you. Coming up, generative AI is blowing up as people use computers to generate a love letter or a college essay. We tested whether it can write for TV. This is Bloomberg.
This is ChatGPT. It's just written a new introduction to our technology show. I'll read it to you. Welcome to Tech Talk, a new television show where we explore the latest and greatest in technology and how it is shaping the world of investing. Pretty good. It's also helping people write some new poetry, perhaps solve a difficult maths problem, even write computer code. The key upgrade to this particular platform is that it can answer follow-up questions. It can admit its own mistakes. It'll also reject answering inappropriate questions. Just remember when Microsoft's AI chatbot Tay was cancelled after, well, humans managed to teach it how to make racist comments. So here it is. It's not perfect. As co-founder Sam Altman says, look, it's an early demo of what's possible. He set it up back in 2015 with one co-founder, Elon Musk, and some other wealthy backers. Elon Musk himself has now exited the board. He's got some other things to do, it seems. Yeah, it's interesting to remember that Elon Musk was part of that founding team in 2015. Lots of other wealthy backers. But I think Sam Altman's been taking, of course, to Twitter again today to talk about how ChatGPT launched on Wednesday, Ed. It now has crossed 1 million users. Everyone's using it all over my social feeds.
What's crazy is not just that everyone's using it, it's the range of things they're using it for. And you did an amazing job explaining kind of its early stages. But already I'm seeing on the Bloomberg terminal, on my Twitter feed, people saying, will this replace humans? And I'm thinking, some of my favorite music artists, will they be replaced by this? Because that's another use case, right? A song, poetry, you mentioned in your piece. a little scary.
Joe Weissenthal's actually got it to write really quite a good track. It would seem all about cocktails and reminding him of a place in Thailand. And he even got to talk about the notes that should be used in the first riff. I'm interested, though, this does stir about the power, and it does stir about how this is going to be regulated ultimately, Ed.
Yeah, it does. And I'm worried.
That does it for this edition of Bloomberg Technology, hey? Tuesday, we have the Kraken's incoming CEO joining the show. You don't want to miss it. From New York and San Francisco, this is Bloomberg.